And 4 states down, Super Tuesday less than a week away. Candidates making their case for the presidential nomination. But my next guest says the biggest issue facing our country right now is still not being addressed. Joining us right now is Michelin North America Chairman and President Pete Selleck. Pete, good to see you.
Good to see you,
Thanks so much for joining us. I want to get a sense of how business is going. But first, let's talk about this, because this is an important issue for you that you think is not being addressed. What is it?
Well, Michelin is based in South Carolina, so we've been going through these discussions the last couple of weeks. It's been very exciting in South Carolina.
Yeah, I bet.
But, you know, at the debates, you hear the question every once in a while asked about, well, what about this federal debt? You know, what's going on
Oh,
there?
You mean that $19 trillion number?
Yeah, the little $19 trillion. And the candidates, the standard answer is go to my website. They don't want to talk about it because the solutions, they know the solutions. The solutions are just the opposite of what the candidates are talking about today.
Particularly since, Morgan, one of the solutions has to be Social Security, the entitlements, which are on the road to bankruptcy.
Absolutely. I just had dinner with Senator Perdue, one of your colleagues who used to be the CEO of Reebok, and he was saying the same thing that you are about the national debt, and he's incredibly frustrated. He said the only way to fix it is through the budgetary process in Washington, which we just saw the huge omnibus that passed. Do you see any way in which we can break through on the debt? I mean, it seems to be something that people like you care about, but something that we're not really hearing in the debates.
Well, the thing that drives our business the most is economic growth.
Right.
And the biggest threat to economic growth that we see in the coming years is the fiscal situation at the federal level of the United States. So they know the solutions. There have been commissions like Simpson Bowles and Domenici-Rivlin that have sat down and looked at entitlement programs. They've looked at the discretionary spending. They've looked at the tax structure. And the solutions are known. They're difficult because obviously we have a $500 billion problem today. That's the deficit that the CBO says is going to continue to grow about $10 trillion in the next 10 years. So everyone knows if we do nothing that this debt is going to continue to grow. It increases the risk that the moment that we have an economic crisis or we have some sort of a military issue, that it explodes, and then the impact comes to interest rates and confidence, and then the whole economy can go bust.
Nobody wants to be the politician that says, okay, I just cut your Social Security benefits.
That's exactly right. Because the bottom line is, what is it? It's either you inflate it away, you cut spending, or you raise taxes. I mean, there aren't any real fancy solutions. You know, what I'm curious about is, as CEO of a company, Pete, we build into our model slower economic growth because of the deficit. And the deficit is nothing compared to what it's going to be in 10 or 20 years if you look at the projections. Do you actually build that into your business planning? You build that into your business model when you're planning forward for 5 or 10 years in infrastructure spending and various items?
It's very difficult to build a crisis into a business plan.
Not so much a crisis, more of a destruction on an annual basis. This is our theory, a destruction of an annual basis on the potential GDP, because it's basically going out to pay debt servicing, right? Well, so in other words, slower economic growth going forward.
Well, clearly we have built in slower economic growth.
Yeah.
But at the same time, we recognize that this is going to have to be solved, either solved or there's going to be a crisis, one of the two.
Yeah.
So the question that we're trying to get people to understand is it's a lot easier to solve it in the short term, even though politically, as you say, it's very, very difficult, because the only way to solve it is to basically reduce entitlements, to reforming them, extending retirement ages, you know, changing the inflation factors on certain benefits.
Well, what's interesting from a business standpoint, too, for you, doesn't that mean that you hold back on expansion? You hold back on infrastructure spending because you're concerned about what the future looks like? So we have a concern that the deficit's not going to be cut. So what businesses do is they basically retrench to be more conservative in their spending. Is that the case?
I feel like that's what's going on right now. Businesses are sitting on cash. So the question becomes, characterize the economy for us. What are you seeing at Michelin in terms of tires?
Well, right now we don't have a short-term problem, because right now we are selling everything that we're making. We're benefiting from the current environment where prices of oil are low.
Right.
Consumers are driving more miles. That's what drives our business, both in the passenger car side and in the heavy truck side. So that is very strong for us, so we're looking to continue to expand in those areas. But you're right, you get the sense that more and more companies are starting to put their foot off take the foot off the accelerator a little bit and start to go, you know, find that brake and start to tap on it just a little bit.
What about the debt load that individuals have taken on and the loans that they've gotten to buy used and new cars? Do you worry about that? Longer loans, more debt? Well,
in fact, personal household debt has gone down over the last 4 or 5 years.
And the savings rate is up.
And the saving rate is up. So I think consumers learned something in the crisis of 2008, 2009. And we're even seeing the money that they're saving at the oil tank today, they're not spending it all. They're actually saving some of that, which is negatively impacting the economy in the short term, but it's certainly creating the foundation for confidence that's very important as we move long term.
Do you think we're going to go into recession this year in 16?
No, we're projecting that we're going to see between 2 and 2.5% GDP growth this year.
2 and 2.5%. So, I mean, all of this worry about recession in 16, it's founded on something. I mean, you know, the industrial side of the economy is already in recession. Is that a fair statement?
The numbers that I've seen indicate that in general it is, but in our business it's not. So it's happening in other places, but as I said earlier, some companies are really benefiting from the fact that the auto sector and transportation remain very strong today.
Yeah, I mean, that's one of the few areas of the economy that's doing, you're in the sweet spot right now.
Today.
And you're a technology company too, right? Tell people.
We are.
This is really shocking to me. As a tire company, I think, okay, a tire, right? You told me off air that 20 to 30%, you say it better than I do. Go ahead. What were you saying?
Well, 20 to 30% of the fuel that's used by cars and trucks are consumed simply to overcome the rolling resistance of tires. In other words said, if tires rolled on steel wheels, they get 20 to 30% better fuel economy. We've been developing technology over the last 20 years that reduce this rolling resistance and improve the fuel economy. So, for example, working with Ford, with GM, with Tesla, to work on the issues related to improving fuel efficiency, particularly today in light trucks, because the EPA requirements on light trucks went up this year, so we were a major player in helping those companies deal with that. And then longer term, as Tesla looks at expanding their autonomy, they have to have tires with lower rolling resistance will also wear a long time. So right in the middle of all that.
If there's one industry that is in the middle of a revolution, I think it's the auto sector right now. I mean, you've got Tesla, you've got Uber, Apple, Google doing driverless cars.
Right.
Do you think in the next 10 years, I mean, how many of the vehicles on the road will be driverless cars, you think?
More than today. More than today. I think it's going to be gradual, but it's one of these changes that you can't really predict what's going to happen.
Autonomous cars.
But not only that, but we're also developing technologies today that the tires don't have any air in them. We're currently selling in certain applications like skid steer loaders and commercial lawnmowers. We have a radial tire that requires no air. Because obviously air is a tire to work has to be inflated, and that's one of the biggest issues, because the tires have gotten so good that people, you know, I'm sure you check your tires every month like you're supposed to, but most people don't take off the valve cap and check the inflation pressure.
So you're supposed to do that every month?
You're supposed to do that every month.
Note to yourself.
You're supposed to do, yes.
Note to yourself.
I will get you an air gauge. I have many.
Thank you so much, Pete. Great insights. We'll see you soon. Pete
Certainly.
Selleck, CEO at Michelin there. We were going to